If you cross a state line for a gig, your taxes change. Today, we break down exactly what happens when creatives film, tour, shoot, or perform across multiple states and how to avoid double taxation.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal,
hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hey guys.
You should probably redo that one.
Yeah. I was like, we didn't talk about who's starting it, so I was like, is it me again? Or is it you?
Oh, dear. Yeah.
Do you want me to, or do you want to?
Okay, you go.
Okay. Hi guys, I'm Maisha, and this is Anastasia, and what are we going to be getting into this episode?
Well, I was thinking we would talk a little bit about people that switch over state borders.
Ooh, yeah.
So dealing with, when you have someone who has a job that's a little bit more nomadic and it has multiple locations and you're constantly going all over, there are a few different rules and it can get pretty complicated.
Okay.
So I think it's probably something that will break up into smaller chunks.
That's fair.
But one of the key things to remember is we talk about the IRS a lot, but sometimes we forget about the states.
And they all differ, right? For the most part?
Exactly.
Okay.
Each state has different rules, and also each state has different capacity and to send you notices and come to your door and all of that fun stuff. And the IRS, they get everybody kind of nationwide, but the states, sometimes they have to fight for their income taxes. So just making sure that you're kind of filing in the correct state is going to be really important, especially when you're working in multiple states throughout the year. So, we have some musicians that are, touring, things like that. So that can get a little bit tricky.
So why does the state care where you're working versus just where you live? Like, what is it? Because they're all different? Like, why? Yeah.
So a lot of states are going to have, again, different rules about what qualifies their income versus another state's income. But I guess the most basic way to think about it, and the way, California, New York, in a lot of cases, they feel is that the income isn't taxed necessarily where you are and what your home base is. It's taxed based on the recipient and who is benefiting from the service.
Okay.
So if you have a client who is a California resident, even if you're not in California and you're in New Mexico or Wyoming or Maine, what have you, because your client is in California and they're the ones that are receiving the benefit of your services and they're the ones that are paying you, then California is going to request income tax from you. So, it can get a little bit tricky, obviously, the state, it's hard to find every single person and track everyone down. But that's going to be the basis for it. Also, when you're physically in the state, each state is going to have different rules. So some states, it's the number of days that you're there. Some states, it's the amount of money that you're charging while you're there. So, just as you're traveling, you need to be aware that all of the states are going to have different rules about whether or not you should be filing a non-resident return in that state, claiming the income that was earned in that state and paying income taxes there.
Gotcha. So this sounds very similar to like when we were discussing sales tax and like having a nexus and stuff. So is it almost like an income nexus with like what you're doing? Okay.
Right.
Okay.
Yeah.
All right. So how would like a creative or a person who is nomadic with their work, like how do they know when they've hit that nexus? Is that just they have to know? Like they need to look it up?
Yeah. Because remember, it's the business owner's responsibility to educate themselves on the laws.
Oh,
So-
okay. Yeah.
So, yeah, it's that whole, you just have to know kind of thing. But there are certain tax accountants that are familiar or specialize in industries that are moving across state lines pretty frequently and things like that. But I mean, and even some cases, like I said, like with a musician who's touring, sometimes the company just says, I just want everybody on W-2. And then you get like one long 6-page W-2 because for each night, each show when you're in a different state, you just get the certain amount that you made for that night in that state, and then you move to the next state. So you end up having this like super long W-2 that breaks out all of your income based on the different states that you were in.
Sounds fun. So yeah. So if you're not looking into it, making sure you have a tax accountant that is familiar with it. I got you.
So,
okay.
And a lot of it's going to be all of that documentation. So you need to be aware of what your travel dates are, have them like in a nice organized format. So if you are traveling pretty frequently, that's something that you can provide your tax accountant, because they need to know where you were, how long you were there, and how much you earned while you were there to see if you've gone over one of these thresholds there. And then that really helps, kind of frame the rest of the conversations.
Is there like a limit? So like what happens if someone works in 5 states in 1 year? Like then they might have to have 5 non-resident tax returns, or 6 if they're including their home one. Oh, okay.
Yep, because there's because you have non-resident returns, then you have the difference between your residency and what your domicile is.
Yeah. Okay.
Because residency is where you live, but your domicile is kind of like where your heart is, and there's like different things there, because there's also things where maybe someone is working in a different state and they work there Monday through Friday, and then on the weekends they go back to their original state for the weekends where their wife and kids are, so then again, like which state actually owns all of that income, and kind of breaking that out. And then also keeping in mind that especially states that are neighboring sometimes have relationships with each other as well.
Okay. Just got more complicated, but okay. Yeah.
Right. So just kind of being aware of, if you're consistently working in different states, knowing where you are, how long you're there, and how much you're earning in that state can kind of trigger some of that.
So not just earning, but like with the expense side, is there like what's like the pros and cons of like per diem versus just like all your actual expenses? Like is there
like other things once you're So if you are traveling and you are getting a subsidy for all of the travel expenses and things, I mean, a lot of cases, because we have the per diem and there's all kinds of different rules that kind of go against that. So in a lot of cases, especially if you're an employee, there's what we call an accountable plan. So the accountable plan requires that you submit all of the receipts to the employer for reimbursement. And so if you're submitting the receipts and you get the money back, then it's not going to be taxable.
Okay.
But if they instead give you a lump sum and they don't require that you submit any documents for that or any proof that you,
used it.
Exactly. Okay. Yeah. Then in some cases, it can be added to your income and considered income on your side. There are some little things. So, I mean, if you get a per diem that's like $68 or less a day for meals and little travel, then, that's not taxed. But anything above the $68 would be taxed, and then it's like 173 for. It's always weird numbers.
Is there like an easy way for creatives to keep track of this type of stuff? Like,
yeah. So I mean, and especially like when you have a 1099, and people are reimbursing you for the costs, and people say like, okay, this is my per diem, in some cases, it will still be added and included in your gross income when they send you that 1099.
Oh, okay.
But you're still not going to be taxed on it because you've already spent it. You're claiming all of the meals, you're claiming the flights, you're claiming, the hotel lodging and everything when you are filing your return. So it still nets out to zero. So they're giving you money, you're spending it, so there's no tax that's associated with it. So, and if you, let's say you did submit the receipts, they reimbursed you for them, it's not included on your 1099, you've already been paid for those expenses, so you cannot include them again when you file your tax return.
Oh, okay. I think I see what you're talking about.
Right. Yeah. So you can really only claim the same expense once. So you either, claim the full income and then deduct the expense, or, the person just reimburses you straight, and then, you're not claiming the income, so you're not claiming the expense.
Gotcha.
On there.
Yeah.
So
you got to pick one or the other. Okay. That's fair. I mean, that makes sense. Yeah. You just have to show your work.
Exactly.
Okay,
exactly.
cool.
So if they do include it, like I said, it's not a big deal because we're just going to add those expenses onto your return. That way you're not taxed on it.
Okay, cool. So is there something that even like small freelancers should kind of be aware of? Like if they're not doing like a whole lot, like is there just, I guess.
I mean, I think don't be afraid to file another return in another state. In a lot of cases, it's the exact same thing that the IRS does with other countries, where if you're living in California, but you do a big job in Utah, so you pay taxes in Utah, when you file your return in California, you're telling California, I already paid tax on this income. Here's the amount that I paid. And then they'll give you a credit. So you're not going to double pay your taxes. So just kind of keeping that in mind. And then also, sometimes the things that pushes you over the threshold is what they consider your worldwide income.
Oh, okay.
So that's also something to kind of keep in mind. So it's just really important to make sure that you know where all of your customers are. So if you have QuickBooks, making sure you're filling out that address section is really helpful. And then also, where are you at any point in the year? But, ideally you would have all of that travel information anyways, because you need it for your documentation for the expenses that you are paying there.
Yeah.
So that you can show that it was true travel that you were doing at that time. So.
Okay, cool. So like it's I forget when this one's gonna come out. I know it's later in the year, but then I'm not sure when this one will be here, but it's like anything that creatives can do. If they're listening to this at the end of 2025, is there anything they can do? And then if not, how to get into 2026.
Right. I mean, a lot of it, again, make sure you have some kind of documentation system, even if it is just like putting your travel dates on a Google Calendar. That way it's something that's easily shareable, right? It is something, making sure that your tax accountant is aware that you are traveling. So you might have requirements in other states. And then also just so you're aware, like kind of starting that conversation, because some tax accountants charge by state, and some tax accountants, the way that the software is packaged, they have to purchase individual states.
Gotcha.
So that's why some tax accountants, they won't do other states. Or, like if you did a show in Philadelphia, some people don't even touch Pennsylvania, because some of the states can be really complicated. So just making sure that you're working with someone that is aware of your nomadic lifestyle and has the ability to support you in that is going to be really important.
I didn't know that they didn't like Pennsylvania either. I've always heard New York is like, you need someone that's very familiar to do New York, but Pennsylvania
like
too?
Ohio. Yeah, it's because some of it'll be like, you have to choose the cities and do all kinds of city stuff. So New York, at least, you have New York City, and then, it's pretty straightforward. But if you have to know like Cleveland, Cincinnati, like all all of the individual ones
Gotcha.
are going to have individual requirements. And like I said, some of the software allows you to file for every state, and it's not an additional charge, but some software, it really forces you to select only one state. So if you're the only person that they're, filing a New Mexico return for, it might not make sense for them to pay a couple $1,000s to add New Mexico to their software.
Yeah.
In
that's
order
fair.
to do that.
So making sure it's a good fit as well. Yeah. And it sounds like it's like something we harp on a lot of, just record keeping, just keeping track of it in some way, shape, or form so that you have your backup.
Right.
I have the memory of a goldfish. So just me, I don't remember what I did, 2 days ago. So,
well, and sometimes, I come across like pretty straightforward cases.
Yeah.
They have an Airbnb or a short-term rental in a different state. That house is in a different state. So you do have to file a tax return in that state because all of the business, all of the income is coming from this house that is in this state. So, I think people do expect to file a state tax return when they're moving from one state to another.
Yeah.
But sometimes they don't think about it, when they're kind of like traveling around and different things like that. So,
that's fair.
And like I said, like if you have a house in a separate state, you're like, well, I'm filing my taxes, I'm including that income. So why do I need to do it over there? And especially something like a house that is pretty stationary. It's on an online website where you're offering the service, it is pretty clear and the state is available to kind of come after you. So, and then also kind of keeping in mind that each state has different rules for how long they have to audit you.
Gotcha. Okay.
So, normally, with the IRS and then also with the states, they like to have it as a very relatively short time window. But sometimes if you don't file your return, then that time window never actually starts.
Oh, okay. So you need to do that. Yeah. Okay.
So just kind of keeping that in mind. And like I said, just kind of being aware of it. And sometimes it's, a little bit silly. Oh, $5 here or $7 there, something like that. But, in some cases, maybe you're just doing that because that starts your time clock, and they have, 2 to 3 years to contact you after that point to be able to audit and try to figure that out. But,
Gotcha.
But
it has to be done in order to get that. Gotcha.
And
okay.
I mean, like I said, we see it a lot with nomadic employees, but it really kind of exploded, especially with, remote workers. And then again, that idea of the person who's benefiting from the service is where that income is going to be taxed. So that's why we saw, if they had a corporate office in California, then they're going to consider, California income taxes because that's your actual home base, even if you're,
living somewhere else. No, that's fair.
Kind of keeping that in mind. And then, like I said, just being aware of even though it can take a long time to establish residency somewhere, they do look at, where is your doctor? Where are your kids? Where, where is all of your stuff to determine which state is actually your home state. And then every other state, you file that non-resident return and kind of move forward that way. So,
okay. So keeping track of everything, some good record keeping, letting your person know, your tax accountant know that you do these things. So that way, in the beginning, they're aware of what you're going to be having coming up the pipeline and make sure that they can also do those returns for you and stuff as well.
Right. Yeah.
And they're probably just more familiar with like, oh, for this state, once we get here, we got to do this thing. Yeah.
And especially like if you're moving from one state to another, but you are keeping clients in that original state, making sure you're aware of, do I still have to continue paying income taxes in that state if I keep these clients? And, what does that look like for me? Because that can also play into, what do I do with my LLC? What state does that belong in? So, we start to get pretty complicated questions. So just wanted to, kind of point out that the IRS isn't the only entity that collects taxes. Yeah. So it can be very important. And a lot of the key indicators are, where is the client? Where are you performing the services? How long are you there? And how much did you earn? So making sure that you have some of the answers to those questions, because that's what we're going to ask you, to kind of make our final decision there. So if you have any questions about working across state lines and kind of what that means for you, feel free to put a comment below or send us an email, and we will be, semi-happy to help. It's a lot to remember, but that's what we're here for. So
that is true.
Let us know.
We like to dig in. I don't know. I like a good research. Yeah. Bye, guys.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.